Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Well, some recovery from the lows is what we are seeing. 60 points off the lows right now. Nifty sitting with cuts of 91 points at 17,763, and the lows were around 17,690. So yes, there is some recovery which is underway, but we'll have to see whether that sustains or not. Midcap index, that's the top performer today with gains of 1%. While we've been talking about the rout that we are seeing in the Adani Group stocks in the last couple of days, look at the metal index, because Nifty metal index is down 1.5% in today's trading session. And this year itself, it's down 14%, and most of those losses have come in this month itself. So this month is what the index shows is down around 10%. So a big fall in the Nifty metals index. So those stocks will of course be on our radar as well. And Divi's Labs, that's the stock that should also be on your radar. Reported really weak set of numbers on Friday. And again, after so many downgrades and EPS cuts as well. So today it's down around 4%. So that continues to see a downtick in trade today as well. But it's time for our special segment, Midcap Spotlight. Mangalam is joining us and focusing on Varun Beverages, reported quarterly earnings just a while back. Mangalam?
That's correct. You know, Varun Beverages is surging post their fourth quarter calendar 2022 numbers, which is October to December. And that's on account of a couple of factors. Remember, it's a seasonally weak quarter for a company that makes cold drinks because of winter. But it is this delayed winter, festive season, and a low base, because it was also the first festive season after 2 years of COVID-related impact that boosted their performance. A strong quarter coming in. 28% jump in their overall revenues, closer to 2,200 odd crores on the top line. The gross margins improved as well, and as a result of which we saw a big improvement in their EBITDA too. And that was primarily because of operating leverage coming in. The margins to the company, 13.9% versus 12%, and the net profit jumped by around 150 odd percent on a low base. Again, the net profit was led not only by the revenue and the EBITDA, but a couple of other factors like lower effective tax rate and higher other income boosted the net profit as well. The overall volume growth of the company this time around was 18%, but at the same time, 70% of their revenues coming from carbonated beverages. That saw a 25% volume growth. That was extremely strong. Juices grew by about 17%, whereas water grew by just around 5 odd percent. Sting, which is the energy drink, which does well for them in terms of realizations and margins, is now about 10% of sales, and most on the street are betting for higher contribution coming in from this to improve their performance going further. And as a result of which, their net realization increased by 6% as well. That's just the beverage part of the business. They do have a big trigger coming in from the snacks part as well. So let's see how that plays out. But for now, in a seasonally weak quarter, Varun Beverages actually reported a very strong set.
Thank you very much for all those details. Let's also take stock of Aarti Industries and Sumitomo Chemicals. Reported the Q3 numbers. How did they look?
Well, for Aarti Industries, it was a decent set, Rima. Remember why the numbers are not comparable? Because in the base quarter, there was a big fee income that the company received. So we are looking at the numbers on a quarter-on-quarter basis. Revenues are down 1% for the company at 1,667 crore rupees. EBITDA is up 8%, and because of that calculation, margins have come in at 17.2% versus 15.2%. Profits are up 10% for the company on a quarter-on-quarter basis. If we adjust for that fee income, company has given those calculations as well. On a YOY basis, revenues are up 12% and EBITDA is up 26%. This is on YOY basis. So company says that this time around 81% of their revenues came in from value-added products, and product offtake linked to textile industry like dyes and pigments remains subdued. This is something that the company has been telling us for last 2-3 quarters. However, they expect it to recover in the quarters to come. In next 2 to 3 quarters, these discretionary segments should do well for the company. They witnessed quarter-on-quarter decline in some of their costs as well, related to logistics and freight costs as well. In terms of FY24 outlook, they are expecting an EBITDA margin of 25 to 30%, which is as per the previous average. They reported 28% margins in FY22, so some improvement out there. They have a capex plan of 2,500 to 3,000 crore rupees, and they're adding new chemistries and value-added products as well, close to around 40 plus new chemical products. The conference call is at 4:30 p.m. today, but of course the stock is up around 6 odd percent on the back of good outlook and the fact that the company has spoken about lowering raw material prices as well. On the flip side, Sumitomo Chemicals is lower in trade. Margins were under pressure. Profits, however, were higher due to higher other income. So overall revenues were up 7.5%. EBITDA, however, declined by 5%. Margins are lower by 190 basis points. This is because of higher raw material prices, and generally agrochemical companies this quarter have seen some pressure on margins as well. Profits are up 1.7%, and this is led by higher other income for the company. Nirmal Bang has trimmed their FY23, FY25 EPS estimates and target price as well. They have a target price of 518 rupees per share on the stock. But yes, today the stock is lower by 3%.
Okay, just add another one. Intellect Design Arena also came out with numbers over the weekend. The stock is down 4% in trade as the growth rates have come off very sharply. Year on year, Intellect Design Arena has seen a growth of only 7.5%. In Q2, its revenue growth was 16-17%. In Q1, its revenue growth was more than 30%. So the revenues have been coming under pressure for Intellect Design Arena, and the stock is subdued in trade. Get into a break. We'll come back with more on the market. Stay tuned.